Well, we turn our focus now to another country that's also facing rising food prices, Russia. Rachel Ziemba is a senior analyst for Roubini Global Economics. She's also the co-author of Scenarios for Risk Management and Global Investment Strategies. She says that Russia can expect lackluster economic growth this year. And Rachel joined us now from our London newsroom. Rachel, good to see you. Thanks so much for joining us.
It's a pleasure to be with you today.
Well, let's talk a little bit, get your sort of a snapshot on the country. We talked a little bit about food prices. That is a factor in inflation in Russia that has been ticking up. But what is your outlook for CPI in that country as well as your GDP forecast?
Sure. Well, in the outlook we just published a couple of weeks ago, we highlight that inflation really is picking up quite strongly. It's been a view we've had for some time. And in Russia, food prices are part of the story, but it's also that Russian government spending picked up very strongly. Government transfers through the pension system is very strong. So we're expecting CPI to peak at around 10% midway through next year, and average close to 9% for the year as a whole. Now, that's nowhere near what Russia experienced in 2007 and 2008, but it's still very high. And so we expect Russia is going to have to, the central bank is going to have to raise interest rates. And the reason that's
Rachel, very quickly, let's go through some of the factors of growth. I know I was reading through your 2011 outlook there, and one of the big factors for growth in this country is oil. They are so heavily dependent on exports of hydrocarbons there. Where do you expect oil prices to go in the year?
So our RG is expecting an oil price of to average about $90 a barrel and be in a range of the mid-70s to probably touching $100 a barrel. So for Russia, that's a bit of a saving grace. Oil prices that high, but it doesn't get them. It doesn't mean they're out of the woods. We're still expecting, even with relatively high oil prices, for Russia's growth to be relatively weak, below its potential growth rate. We're expecting growth of about 4.3% next year. That's a bit stronger than the year that's just ended, but it's nowhere near the pace Russia was experiencing in the last 5 years. So why is that happening?
Well, I was going to say very quickly, what about consumer spending? That is another important factor in this country, sort of getting past its current issues.
Certainly, consumer spending was the driver of growth last year, and I think it's going to be the driver of growth again this year. That's helped by government spending and government transfers. One thing, in the second half of this year, we're expecting investment from some of Russian corporations to begin picking up and credit growth to start becoming more of a factor for both consumption and investment. But we are seeing an environment where Russia is not going to be growing as strongly as some of the more domestic demand-driven economies like Brazil and Turkey.
And when we talk,
and as a result, might have trouble attracting investment. I'm so sorry.
Oh no, that's okay, not at all. There's a little bit of a delay just between London and New York in terms of you hearing me and me hearing you. But very quickly, you did mention credit growth. What is going on with the banking sector right now in Russia?
So Russia's banking sector has been consolidating. It's been lending growth has been picking up. That's the good sign, the good news. The bad news is that a lot of the lending has gone to the government sector, to the public sector, not to the private sector. And I expect that the construction sector, real estate, some of the sectors that drove growth before the crisis are not going to bounce back very strongly. The good news for Russian banks, though, is that the largest banks are actually in pretty good shape. There are some problems in the small ones.
Now, one of the things you mentioned there was privatization. I want to talk about that. The government is privatizing a number of assets. Partially, that's one of their ways to raise funds. But to what extent are we actually seeing these companies go fully private? And to what extent is that just sort of it sort of seems private, but really is run by the government?
Well, there's a big privatization plan coming on stream starting this year and going for 3 years. And it's something investors are watching very closely. I think all of these companies, though, there is still going to be majority owned by the Russian government. So activist investors who are looking to come in and shake up these corporations are probably to be disappointed. That being said, if the privatization goes, goes as planned, it could provide some opportunities for direct investment and portfolio investment, and Russia's been having a really hard time attracting some of that capital. In 2010, Russia had outflows.
Yeah, foreign direct investment, I think, has been very leery of the corruption. A lot of talk about corruption in the country. There is an upcoming election at the end of next year. How will that factor into the way outside investors feel about the country?
I think that'll be a key testing, but key testing ground. Towards the end of last year, many people were starting to get a bit bullish again about Russia because they started talking about joining the WTO, privatizing assets, and modernizing. I'm still a bit skeptical that the modernization plan will go forward, because I think the Russian government the Russian government is not prepared to really allow more liberalization. The institutions like the police that would be needed to enforce intellectual property rights are not in place. So I think there will still be a significant wariness among investors. That being said, with oil prices relatively strong, this is going to mean some flows back to Russia. And but I think that people are going to be looking very closely at the quality of the assets, the quality of the debt, and are going to be watching to make sure that they're going to be allocating their funds among the companies that are more tied towards Russian consumers and also towards some of the oil companies, and less tied to the to the manufacturing sector.
All right, Rachel, thanks so much for joining us.